All right, welcome to another Forex section. This analysis is for the 24th day of July 2026. We are trying to get our setup and our trading plan before the market open in the next few hours, let's say about 2 hours or 3 hours from now. The market should open for a new day. And before we go into the analysis, if you have not subscribed to this channel, please do well to subscribe so that you don't miss out of our daily analysis. Okay, so and also this video is for educational purpose. Okay, so let's look at the chart. Now, if you notice, we did this plan yesterday and we trapped the price around this level. And I told us that the best place to actually take a buy trade is at the break of this structure retracement to this level. If we see a bullish engulfing candle, then we can take the trade to the upside. And the second possibility was the break of this structure. But I told us that because of this major zone, I will not be taking a selling opportunity at the break of, I will not be taking a sell trade at the break of this level unless this major zone break. And as you can see, the market break, I told us that the market break through this level or through a level is not enough for you to start uh, taking a trade. I told us at the break of the structure, we should wait for retracement, just as this arrow, wait for retracement, then wait for bearish engulfing candle to take the sell trade. Now, there are many traders who have started selling this market. That is a very wrong way to trade. Let me tell you why. This market can decide to, from this weak rejection, from this weak rejection, the market can decide to continue to the upside. Very possible. Very, very possible because the price finds support at this level. So there's every tendency that the market can reverse from this place to the upside. This could be a fake out. This could be a stomp hunt. Very, very possible. So that's why I always recommend you wait for a full price action retracement. Then you wait for a candlestick, an engulfing candlestick for confirmation. Now, if you wait for that, you'll be able to, before the retracement, the engulfing candle, you will know if actually is a re-break of structure or is a fake out. Okay, so now that this market broke of this structure, please, if you have started selling, it's not bad, but you enter too early. Okay. Now the market broke in the 4 hours. Now you go to 30 minutes or 1 hour and wait for retracement. As you can see, the market have already started retracing. Okay, it has already started retracing. Now, when should you sell this pair? When? Let me tell you the safest time to sell this pair. Now, the market is already forming some level of retracement. Now, at the break of this vertical support, at the break of this, that is your entry. At the break of this, that is your entry. If you start selling at this level, I won't say you are wrong, but you enter too early because the market can find support from this level and start going to the upside. As you can see, this is it's looking like you want to start forming higher low. And once higher low starts forming, of course, you know uh that is an uptrend playing out. So at the retracement to this level or anywhere around this level, once you see a bearish engulfing candle, a big candlestick with volume, not just a small candlestick, a big candlestick with volume, breaking out of this trend line, then that is a sign, that is a possible trigger for a sell trade. But if you don't see a break of this vertical, this minor structure, then there's every tendency that the market can break back into the zone and continue to the upside. Okay, if this trend line is not broken, the market can break back into the zone, retrace back, and go to the upside. That is a possibility. Now, I always recommend that you don't trade the market. Don't just predict the market and just understand the chart. Forex is actually not that difficult. Just understand the market and follow the market. If you take a loss, fine. That is why you should risk very small, at least 1%, at most 2% of your account. If you lose, fine. You look for another opportunity, you enter into the trade. Okay. So, what is our setup for uh 24th of July? What is our setup? Now, this is our setup. Take note of this. Take note of this. Now, once we see retracement to back to this level or close to this level, and we see a bearish engulfing candle, that is a signal for a sell. But make sure to wait for the retracement in a smaller time frame, maybe 1 hour time frame or 2 hours, let's say 1 hour or 30 minutes time frame. But because of this weak rejection, also be watching out for bullish engulfing candles, because sometimes before the market trend, it has to cause liquidity in the market. So this could be liquidity being formed in the market. So now have these two possibilities in mind. This can be the market stopping out or until stop and to cause liquidity to go to the upside. This could be the break of structure that the market want to actually go to the downside. Either way, you don't need to break your head about it. What you should do is just for the sell trigger, wait for the retracement, the break of structure from the smaller time frame, the trend line I drew from smaller time frame. Wait for that structure to break with a candlestick. The break must be a candlestick with big body. Once you see the break of that structure, it's a confirmation for the set trade. But if you don't see that and the market starts forming higher low around this level, if you start seeing higher low around this level from your smaller time frame, you start seeing higher low, then there's every possibility that the market wants to continue to the upside. So we have to watch out for these two possibilities. Okay, so that is that for GBPUSD. So just watch the trade. Let's see what the market will do. Either way, make sure that you are risking at most 2% of your account. That should be the highest you should risk. But I advise 1%. But if your capital is very small, then you can risk up to 2%. But please don't risk more than 2% of your account. It helps you to balance your psychology. And if you risk small, you can be able to exit a trade that is not working. You can exit a trade that is going against you because you know your loss is very small. But if you are using a big lot size, you are risking like 20 to 30% of your account. Now, because you have lost so much, you may want to, you will be having uh, uh, you will be so optimistic that the market will reverse and you start making profit, and you keep on waiting, your loss will start growing bigger and bigger and bigger, and before you know, you lose your account. Okay, so that is that for GBP USD. Let's just watch the analysis and see what the market will do. Remember, this video is for educational purpose only. See you in the next pair. Bye.